The information on this video is provided for educational and informational purposes only. This is not financial, investment, trading, or any other advice. Please do your own research before investing or consult with professional financial advisor. Hello followers and copiers, welcome to my second conference call this year. Today I will talk about my strategy, my portfolio and recent performance, and at the end we will take a look at market analysis and future outlook. Please feel free to contact me anytime through my webpage, LinkedIn, Instagram or email. So I'm elite popular investor from Slovenia and I joined eToro 3 years ago. Since then, investing has been a significant part of my daily life. Besides that, I was studying biotechnology at Biotechnical Faculty at University of Ljubljana with special interest in human genetics and genetic diseases. Since my last conference call, I attended Berkshire Hathaway annual meeting. The meeting happens every year in Omaha, Nebraska, where investors from all around the world gather to listen to Warren Buffett and Charlie Munger talking about investing and business. Besides the meeting itself, there are many other events that are worth visiting. One of them is Berkshire Bazaar. At Berkshire Bazaar, companies Berkshire is investing in present their products, and you can also buy them. By chance, I popped into Greg Abel at Berkshire Bazaar, and he's a successor of Warren Buffett. So that was definitely one of my highlights of the trip. The day of the big event, I was at Arena at 6 a.m., but there was already a huge crowd, but I still kind of got a good seat at Arena, and I was surprised how Warren Buffett and Charlie Munger were answering questions for 7 hours straight. They were talking about de-dollarization, about current market situation, electric vehicles, and so on. And it was really something special. The atmosphere was amazing. And by a chance, I met Monish Parbai in a crowd. And that was also something that I will remember till the end of my life. I also participated in a campaign with The Economist Impact, where me, Heloise, Jeppe, and Zach presented our investing strategies. I will post a link to the videos down below so you can check them out. My strategy has evolved since I started investing, but ever since it is based on my risk tolerance and my goals. So I am following value investing strategy. That means that I'm investing in companies that I believe they are undervalued on the market. My analysis is based on companies' fundamentals. I analyze their financial data from past 5 to 10 years to see how well they are performing. And currently in my portfolio, there are 25 different assets. I'm invested in many different sectors. Among them are technology, health technology, pharmaceuticals, consumer staples, and so on. When investing, I'm not using shorting or leverage, and there are no crypto assets in my portfolio. Since I joined eToro, we had a fabulous year in 2020 when the markets dropped sharply after pandemic started, but they also rebounded pretty fast after government's really huge stimulus to the markets, and my portfolio gained almost 127% that year. The following year was a recovery. The vaccine became widely accessible to the public, and my portfolio gained 21% that year. Last year was not the best year for the stock market. there was a high inflation and central banks started fighting it with rising interest rates. My portfolio lost 8.50% last year, but I'm still proud of that result because it was better than all major indices. This year, my portfolio is currently at 5.2%. And the market is hoping for soft landing, and there is still lots of talk about recession, possibilities for that, and if we can avoid it. Here are some of my portfolio winners. First one is Meta. Meta rose almost 132% this year so far, and it rebounded from last year October lows. This year they announced and released new app Threads that is already available to use, and their growth is also based somehow on AI rally that we are experiencing right now. Another notable winner in my portfolio is Microsoft. Microsoft gained almost 40% this year, and their big growth started during AI rally when they announced another investment of $10 billion to OpenAI. That was in January this year, and OpenAI is a founder of ChatGPT. ChatGPT is an AI tool that is widely accessible, and they have many users all around the world. The third winner of my portfolio is Adidas. Adidas has been struggling with inventory that was left after they ended collaboration with Kanye West. But recently they announced that they will sell the inventory, and all money earned they will donate to charity. I also made some changes to my portfolio. I decided to sell my Zim position. Zim is a shipping company, and because their earnings and their future outlook was not as good as I desired, I decided to sell it. I also added one company to my portfolio, that's Ahold Delhaize. It's Dutch-Belgium company that is that has shops all around Europe and also in US. Now we will continue with more serious matter. S&P 500 surged more than 21% this year so far, and it overcame unofficial threshold of 20%. That means that we are entering new bull market. But it's worth remembering that in last two bear markets, that was in 2008 and 2000, stocks surged more than 20% before they sank deeper into bear market. This time, this bull market is part of AI rally, and big technology stocks are guiding it. Because investors are pouring more money in technology stocks, we can see that a P ratio of those stocks are pretty high. Here on this graph, we can see 6 months change in Nasdaq trailing P ratio. And latest change was almost 50%. The rise of technology stocks also sent S&P 500 higher, and because S&P 500 measures of each company are calculated based on their market cap that is divided by whole market cap of the index. Apple and Microsoft right now account for nearly 15% of S&P 500. So you can see that S&P 500 leadership is really concentrated right now. Here, on this graph, you can also see that if we remove AI stocks from S&P 500, we would cut the index performance by around 10% this year. So that really explains how AI is leading this surge in 2023. But keep in mind that this graph is from May 17th. So this year, if we compare indices performance, we see that Nasdaq is clear winner with almost 32% for this year so far, and right behind it is S&P 500 with almost 16% gain, and Dow Jones is lagging behind with 3.50% gain. My portfolio is lagging behind S&P 500 and Nasdaq with 5% gain. This lag is main reason for this lag is bad performance of basic materials that is closely linked to China and their economy. If we compare sector performance this year, we see that communication services and consumer discretionary and information technology are leading sector this year. And on the other hand, we also see that energy, utilities, and financials that were winners last year are lagging behind in 2023. If we explain why there is a bad performance of basic materials, we have to take a look at how is China's economy doing this year. And latest data showed us that China's economic activity has lost its momentum. Their manufacturing PMI is contracting. We can see that here on this graph, where if PMI is less than 50, that means contraction of manufacturing, and if it is above 50, that means expansion. We can see contraction also in euro area, where it is also below 50. Germany, that is leading, that really has a strong economy and manufacturing, is leading this contraction. And Europe is still struggling with pretty high inflation, even though the ECB is fighting it with rising interest rates. Now let's continue with US economy. Fed started rising interest rates last March, and they had another 25 basis points rise in March, but they decided to pause in June. Although they paused, they said that we can expect more interest rate hikes in future meetings, and there will be another meeting at the end of this month. And we will see what outlook and what will Jeremy Powell say on the meeting to give us some indication where we are headed. At the moment, market is expecting another 25 basis point hike. So this hike wouldn't be such a surprise for a market. Because interest rates are at really high levels, inflation is also starting to cool down. We can see here a consumer price index change in US and how is it cooling down this year. Because interest rates are high, banks are also tightening their lending standards. That is affecting consumers and also businesses, because it is harder and more difficult to get a loan for a car, house, or to fund a business. And that is affecting how economy is evolving, growing, and we can expect more contraction because of that. We can also see contraction in US manufacturing on this graph, where, as I explained before, below 50 means contraction and above 50 is expansion. And latest data from past few months showed us that US manufacturing shrinked the most in more than past 3 years. Now, at the end, I would like to share with you my future outlook. Some indicators like PMI show us that economy is cooling off, while labor market is still strong and inflation is coming down. It is clear that central banks will have to stay higher for longer with its battle with inflation. Consumers and businesses can already feel the pressure of higher interest rates, as borrowing money is more expensive than it was in the past decade. Record high credit card debts are reflecting less borrowing options among consumers. Fed and ECB remarks at the end of the month will give us some more indications where we are headed and some more insights about future tightening policy. For now, it seems like we are avoiding strong recession. However, there will be more challenges before we can say there won't be one. Stock market, on the other hand, is not reflecting realistic picture. Hype around technology and AI is blurring real problems in the economy. For now, I'm avoiding investing more into this field. I'm focusing more at sectors like healthcare, pharmaceuticals, and consumer discretionary. I'm also looking to see how well companies I hold are performing with earnings season that started recently. I will keep you updated on my decisions and changes in my portfolio. If you have any questions, post them in a comment. I'm happy to discuss with you, and I would like to invite you to follow me on Instagram, where I'm regularly posting about events and about different investing topics. Trade safe.